The United States has launched a dramatic overnight airstrike on three of Iran's key nuclear facilities, deploying massive bunker buster bombs in a move to coordinate with Israel and stop the progression of atomic bomb development. That is a huge, huge move, and we're going to talk about it on this show. The overnight markets here on Sunday are moving. The CB3 weekly update begins now. So I know the world is on edge, but the markets are actually not moving that much here on Sunday night. I'm sitting at my trade desk. The NASDAQ opened down 250 points. It's only down 103 right now. S&P 500 down 22 points. The currencies are moving, but not too much. Aussie yen, which is a benchmark for volatility, only up 0.1%. So I think because this happened on Saturday and not just an hour or so before the market, a lot of this has been priced into the emotional factor about this geopolitical fireworks. So the U.S. stock market showed remarkable resilience last week. While the headlines were dominated by the escalating conflict between Iran and Israel, culminating in the U.S. strikes that I mentioned in the open, the major indices actually ended the week with only modest changes. So not a big move up or down. S&P slipped 0.1, NASDAQ managed a 0.2 gain, and the Dow was down about 1% for the week. So large cap stocks edged lower, but mid and small caps actually posted gains. Mid caps up 0.5%, and we have a variety of those assets in all the programs that we trade. Growth stocks continue to outperform value, so names like NVIDIA and Broadcom, which is AVGO, definitely led the charge. Energy and financials were the best performing sectors, largely due to the concern that Iran might try to block the Strait of Hormuz, where 25 to 28% of all crude oil shipped daily has to pass. This would be a catastrophic mistake for not only Iran, but all of the Middle East, as they need exports to generate revenue. So I don't foresee that happening, but that has caused a spike in crude oil prices tonight. Crude oil is trading up over $3. So you might be wondering, with bunker busters raining down all over Iran, why didn't the market panic? Well, investors have seen geopolitical shocks before, and if you're roughly my age, you've seen a bunch of them starting back in the 1990s with the Kuwait issue, and history shows that markets often recover quickly, especially after these dramatic events have proven to be less dramatic than was originally anticipated by, you guessed it, the corporate media. So far, what has happened is all the atomic development that Iran was pursuing has pretty much been destroyed, and that's a positive for the world, not a negative. Obviously, the Iranian leadership is not happy about this, but just about everyone else on the planet is. And the Fed kept rates steady, signaling a possible opportunity to cut later this year. Jay Powell and Donald Trump are still at loggerheads on this, but I do expect at least one rate cut later this year. And corporate earnings remain strong. U.S. economic data, while showing some signs of slowing, is still fundamentally strong, especially in view of the geopolitical mess that we have right now. So the market remains in that wait and see mode, but it's also showing its underlying strength. The S&P 500 is just 2% off its all-time highs, and the NASDAQ is on track for a third positive week out of 4. So looking forward this next week, here's what I see. Middle East tensions, of course, are at the top of the radar screen. No pun intended. The market's next move will hinge on Iran's response. If the conflict escalates, expect volatility, especially in energy stocks and oil prices. But if diplomacy prevails, if common sense and cool heads prevail, we could see a relief rally close up, if not taking out the lifetime highs. The Fed is also in focus, with Fed Chair Jerome Powell testifying before Congress. Investors will parse every single word he says as to a hint on future cuts. Economic data, we're looking at consumer confidence, existing home sales, and the final Q1 GDP estimate. This will give us a read on the health of the U.S. consumer and broader economy. Also, earnings spotlights from Nike, FedEx, and Micron. And Tesla's highly anticipated robotaxi launch could also move the markets, especially in the tech and EV sectors. So stay upbeat and stay assertive. Realize that the long-term investor is not going to be shaken out by anything that's happened over this weekend. Let's be clear, markets climb a wall of worry every headline, every crisis, every rate cut, or every single investor who frets have navigated all of this before. The key is to stay focused on your long-term goals, not the short-term noise. Let me say that again. The key is to stay focused on your long-term goals and executing that plan that we have put in place for you, and not short-term noise. History rewards those who remain invested through turbulence, and the recent pullback is not a reason to run for the exits. All right, it's a reminder the volatility that's in the price of admission is there to help with long-term growth. The market's ability to rebound from April's lows and hold near record highs, even with all this geopolitical consternation, shows that this global uncertainty is not enough to shake the market out of its own pattern of continuing to rise, because corporate earnings are strong and interest rates, even though they're not being lowered by the Federal Reserve, are at least not rising. Areas of the market like industrials and semiconductors are showing leadership. IBM of all stocks is up 28% this year, and the Magnificent Seven stocks are remaining market drivers. And we throw in Berkshire in that to make it the Magnificent Eight. So my final thought, looking ahead to this pivotal week when we're waiting for Iran's response, keep your seatbelt fastened, but keep your eyes on the horizon. The headlines may be dramatic, but the market's fundamentals remain intact. That's the way we see it here at CB3 Financial. Stay engaged, stay informed, listen to our podcasts, listen to our tweets, and go back and listen to the monthly show for June if you missed that. All right, this is not the time to let fear dictate your financial future. We got you covered here at CB3 Financial. Thanks for listening. We'll see you next time.